Let's get right to the floor show. The first week and the second quarter coming in like a lamb. So we are joined by Dutch Masters and Scott Bauer, who's at the SIBO. Guys, when I say tentative trading, the Dow has crossed the unchanged line back and forth today alone 66 times. So, I mean, that's kind of lambish.
That's all.
Is that a word, Scott, isn't it? I mean, you got the S&P looking to close lower for the week. Blue chips on pace to finish a tiny bit higher. But tell me, Scott, about this very unusual situation that puts investors in a weird sort of netherworld where they can't buy or sell U.S. equities tomorrow in the wake of a number that may call for portfolio moves.
And Liz, it's so surprising to me. And behind me, this is the S&P 500 options pit. It has been quiet all day. And if you look at the volatility, it is as low as it has been in months, which is so surprising, given the fact that we can't trade equities tomorrow. Now, there will be some futures open for a very short time, but anybody that wanted to take a position, you got it today, and you're stuck with it until Monday. And again, going back to the volatility, the S&P 500 option implied vol is predicting that for Monday, okay, in 4 days, a 1% move, basically, in the S&P. Now, we've seen over the last 6, 8, maybe even a year, so 6, 8, 12 months, that going into the big jobs print, we have seen that implied volatility so much higher, expecting so much more of a move. So this is telling me that the retail investor and people out there, they're just not scared, which is surprising to me.
Well, it doesn't surprise me that Dutch is not scared at all. In fact, you've been so gutsy lately. You changed a big position you had that you started several months ago and have just changed this past Monday. Tell our viewers what it is and why you have shifted completely out of it.
Absolutely, Liz. Thanks. Good to see you. By the way, we're talking to you from the trading desk in Las Vegas at the Trading Academy. We've got people behind us, 30 fans of Liz Claman back here.
We love it.
Yeah, we called the semiconductors in December 13th on the bull, and we rode them for a good 3 months. We backed off of that in the last week, sold off most all the semis. We started going long bonds and gold about 2 weeks ago, and so far we're looking pretty good there. We actually did that because these are two trends that we see clearly developing in the bonds and the gold. And we actually think that the Fed is absolutely done, no matter what Bullard has to say. I don't care. They're done. We think they're done. We're making our bets on the fact they're done. We think the 10-year is going to crash down below 3%. And where we're playing it is with our ETFs like TMF, and with the gold side, we're playing with Nugget, NUGT.
Okay, let me get to TMF. That is a very bullish ETF, 3x bullish on the 20-year Treasury yield here. Now, you can see what it's done over the past couple of months. And when did you go long this, Dutch?
About 2 weeks ago.
Oh, yeah, 2 weeks ago. So, you know, as we watch all of this, I'm very fascinated to hear what Scott thinks about that, but also about the gold trade, because you've got bullion climbing to very close to record highs. Now, just yesterday, Scott, we had Mike Novogratz on. He, of course, is the big Bitcoin bull, but he's also gone very bullish on gold. He is buying futures, and he just echoed what Dutch had to say, where he basically said he made a case for gold this year, saying that the Fed likely, we're done. Fed meeting in May may be the very last rate hike. And then he predicted that the Fed will be forced to kick it into reverse. Here's what he said, and then I'll let you respond.
And, you know, they'll be cutting faster than you think. And so the gold market smells that. Bitcoin market smells that. You know, gold above 2,000, right? We've come into this 2,000, 2050 area probably 6 times now. When it takes this level out, and it closes up here on a week or 2 week basis, we will blink our eyes, and by the end of the year, gold's going to be 2,700, 3,000. Like, that's the way markets work. When you take out big levels, you move to the next level.
3,000 by the end of this year, Scott. Are you seeing any flows on trading floors that would indicate that's the way of the direction here?
Now, that's pretty aggressive. I do agree with him that if it takes out this level at 2050, 2060 or so, it's got some free room to the upside. I would see 2,200 as my next level. But, you know, Liz, when it comes to the Fed here and pivoting, it's such a conundrum because all of the eco data that we have seen come out over the last weeks, maybe the last couple months, it's getting weaker and weaker and weaker. The jobs numbers are getting weaker, which is exactly what they want.
Yes.
Yet now they truly are faced with, boom, the recession is here. And you and I have had this conversation. I believe we've been in a recession for the last 3 to 6 months. So his calls on both gold and bonds there, yeah, I agree with him. And the regular ETF, the 20-year bond ETF, not the triple weighted one, is TLT. That's about to break out to the upside as well.
TLT. I know it well. I want to go back to this gold issue with you, Dutch, because, again, you had some amazing trades. I believe last year you closed up the year, you and your carnivore trading peeps over there, up 321%. And so far this year, you're up 52%. So are you going to continue to pile into this gold trade, NUGT, or will you start taking some profits? Have you already taken some profits?
We ripped out some profits earlier in the week on NUGT, and now what we're doing is laying into the gold trade starting Monday with some less leveraged and across the board with a few junior miners and then some high quality unleveraged ETFs. We're being very cautious with stocks. We like just a few, XPOF, which is Exponential Fitness and Ferrari. We're looking for stocks that don't care about the recession and what's going on. But yeah, the gold trade is one of our biggest positions now, and it's going to probably be a bigger and bigger position as we go forward.
Hey, it is great to have you both because you both bring totally different perspectives here. Thank you very much. Scott, Dutch. And Dutch, welcome back. Haven't seen you in a while, so good to see you.
Hey, it's so good to see you, Liz. Thank you.
Always good to see you, and same to you, Scott and the gang.